What do a conflict in the Middle East and a new workforce program by Meta have in common? At first glance, absolutely nothing. But both stories could have a real impact on the economy, jobs, housing, and opportunities here in Texas. Today, we're talking about why global conflict can influence mortgage rates and why one of the world's largest tech companies is making a major investment in skilled trades. I'm Kyle Grimshaw, and this is the Texas Market Brief. Now, let's start with the Middle East. Over the past several days, markets have been closely watching the conflict involving Iran, along with continued uncertainty surrounding the Strait of Hormuz and global energy flows. And the key word here is uncertainty, because even when headlines shift from escalation to possible de-escalation, markets still have to price in the risk. Now, here's why this matters. A meaningful share of global oil and LNG flows through the Strait of Hormuz. So when traders become uncertain or concerned about disruptions, oil prices often react. And when the oil prices rise, inflation concerns can rise as well. We've talked about this before. Now, higher inflation expectations can push Treasury yields higher, and Treasury yields often influence mortgage rates. So while most people see a headline about conflict halfway around the world, financial markets are asking the different question, like, what could this mean for energy prices, inflation, and interest rates? As Texans, this story deserves our attention. Energy remains one of the most important industries in our state. When oil prices move, it can affect jobs, investments, consumer spending, state revenues, and eventually housing demand. This doesn't mean higher oil prices are automatically good or bad. It means the ripple effects can be significant, and Texas often feels those effects more directly than most states. That's especially true when energy prices start feeding into inflation expectations, because once that happens, the impact can extend far beyond gas prices. It can show up in bond markets and eventually in borrowing costs, including mortgage rates. Now let's switch gears here, because while one story is about global uncertainty, the other is about opportunity. Meta has announced America's Workforce Academy. An initial $115 million investment is that no-cost training program tied to infrastructure build-out. Texas is one of the first states included in the pilot rollout. And one of the most interesting parts of the announcement is this. The program is designed to lead to guaranteed job offers for graduates. Think about that for a second. One of the largest technology companies in the world is investing in heavily into blue-collar workers, not replacing them. It is training them. Why? Because AI doesn't just need software engineers. It also needs data centers, power infrastructure, fiber networks, electrical work, plumbing, construction crews, skilled tradespeople who can actually build and maintain all of this. Now, here's what I find interesting. For years, we've heard that technology was going to eliminate jobs, and in some industries, technology absolutely changes how work gets done. But right now, we're seeing something else happen. The AI boom is creating demand for physical infrastructure, and physical infrastructure requires skilled workers. Electricians, plumbers, welders, fiber technicians, HVAC specialists, equipment operators, construction professionals. Those careers aren't disappearing. In many cases, they're becoming more valuable. And if Texas continues attracting energy projects, industrial expansion, and AI-related infrastructure, that could create real opportunity here. Let's connect the dots. Housing markets do not move because of one thing. They move because of jobs, population growth, business investment, interest rates, and economic confidence. The Middle East story affects the interest rate and inflation side of the equation. The Meta story affects the jobs, training, and investment side of the equation. Both can ultimately influence housing demand. That's why understanding the broader economy matters, whether you're buying, selling, investing, or simply planning for the future. Because sometimes the housing story starts with oil, and sometimes It starts with workforce development. Like always, I'm watching 3 things this week. Number 1, oil prices. Number 2, the 10-year Treasury yield. And number 3, announcements related to AI infrastructure and workforce development, because both of these stories could have long-term impacts that extend far beyond today's headlines. If you found today's episode helpful, make sure to subscribe and let me know in the comments, would you rather see your child become a software engineer or a skilled trades professional? I'm Kyle Grimshaw with the Grimshaw Home Group. Thank you for joining me for another episode of the Texas Market Brief, and I'll see you Friday.